Hello, I'm Bill Bullard with RCAF USA, the voice of the independent cattle producer in the United States of America. Well, today I'm going to use the term beef lobby to represent the largest beef packers and all their aligned trade associations and importers. And I'm also going to round up numbers so they're easier to follow. So now exports of beef and cattle in 2021 set an all-time record high. And when you combine this with ever-strengthening beef demand and consumers' willingness to pay all-time record prices for beef, then last year must have been a banner year for cattle producers. After all, the beef lobby has been telling everyone for decades that if you increase beef exports and strengthen beef demand, then cattle producers would be certain to enjoy economic prosperity, right? Doesn't everyone recall this each time they asked the beef lobby why cattle prices were too low during the past several decades? Well, there it was. The record exports and strong beef demand achieved the marketplace fundamentals that were certain to raise cattle prices. And just how high were cattle prices raised? Well, the average annual cattle price for 2021, with all-time record beef and cattle exports, was lower than it was a decade ago, clear back in 2012. In fact, it was 1% lower than a decade ago. But when American cattle were converted to beef, beef prices skyrocketed. And by 2021, retail beef prices were just shy of 50% higher than they were in 2012. So in a decade's time, cattle prices fell 1% and beef prices increased nearly 50%. And for those who like numbers, retail beef prices jumped from about $4.70 in 2012 to $6.94 per pound in 2021. Now, the beef lobby tells us why cattle prices are low and beef prices are high. They say it's because of the economic law of supply and demand. There is simply a greater volume of cattle than there is shackle space to hang them, which drives demand for cattle down. But because the available shackle space is insufficient to accommodate the consumer's appetite for beef, beef prices are too low, resulting in increased beef prices. So there it is, the beef lobby's pat answer to your problem. Too many cattle, not enough beef. They think you're stupid. Let's break this down. If it's true there were too many cattle and not enough beef, then how did the beef lobby manage to drastically increase beef exports? And it wasn't by just a little bit. Exports of cattle and beef increased by well over 500 million pounds, by nearly 20% between 2020 and 2021. But if shackle space was so limited, where did the additional supplies of cattle come from to enable exports to jump nearly 20%? And to answer that, you'll have to look at something the beef lobby does not mention and does not want you to hear. That something is imports of both beef and cattle. In 2021, despite all-time record export volume, the volume of imports far outpaced the volume of exports, as they have every year for the past several decades. In fact, the volume of imports in 2021 was the fourth highest level in 14 years, and those imports outpaced exports in 2021 by nearly 20%. And that tells us this. In 2021, the beef lobby didn't need to slaughter more domestic cattle in order to drastically increase exports, because they gained nearly 20% in increased supplies from their net imports. That's imports minus exports. In fact, they gained the equivalent of about 1 million more cattle from their net imports. So let's keep this simple. In 2021, the beef lobby traded 3.5 billion pounds of beef and cattle in the form of exports for 4.1 billion pounds of imported beef and cattle, which gave them about a 20% net gain in imported cattle and beef volume. This means they netted 20% more imported supplies of beef and cattle than they exported, and the 20% increase in beef and cattle supplies helped drive down demand for U.S. cattle. Now, the net imports helped explain the purported oversupply of cattle and beef on the input side, and the increased exports help explain why the domestic market was deprived a sufficient volume of beef to keep prices affordable. Now, the lesson here is that in the U.S. cattle industry, which is highly sensitive to changes in supply, import volumes matter, and they matter a lot. And the only way U.S. cattle producers can address these increased import supplies is with mandatory country of origin labeling, or MCOOL. The passage of MCOOL for beef, Senate Bill 2716, is the only way cattle producers can hope to compete against the growing volume of imported beef and cattle in their own domestic market. To learn how you can help pass mandatory country of origin labeling for beef or Senate Bill 2716, go to our website at www.labelOurBeef.com. With that, have a productive week. Thank you and goodbye.